Let's go. Okay, so welcome back, everyone. I hope you enjoyed your lunch. For those of you who don't know me, I'm David Kimberley. I'm the FX editor here at Finance Magnates, and I'm sure you're familiar with everyone on stage. They're very famous in the industry, lots of clients, so on, and I'm sure we're going to have a very interesting discussion. I'll let them introduce themselves, and then we can go.
Fantastic. I am Andrew Ralich. I am the co-founder and CEO of OneZero Financial Systems.
I'm Cristian Vlasceanu. I'm the CEO of PrimeXM.
I'm Tom Higgins, and I'm the founder and CEO of Goldeye.
Okay. Well, Andrew, if I can start with you, and I think if we're talking about the future of the FX industry, the retail industry, we probably have to start with ESMA. And what sort of changes and impact have you seen on your clients, and what broader impact do you see the regulation having on the industry moving forward?
So I think everybody on this panel and everybody up here has been in this industry for over a decade. And we remember in the first few years of founding and starting OneZero, we had just gone through a major regulatory overhaul in the US that changed the texture of the FX and retail FX business around the world relatively drastically, and has been a trend that we've seen kind of sweep around the world over the last 10 years. And, you know, frankly speaking, when we talk to clients about regulation, when we talk to other industry participants, for the right providers and certain people in the industry, regulation is a massive opportunity. When you provide a technology platform that lends towards transparency, execution quality, and fairness to clients, which those who exist for 10 years in the industry generally don't cut corners in that way, you benefit from changes that force brokers to make decisions that are best for their clients and that are best for the industry. So we've seen interesting reactions to ESMA. We've seen a lot of offshoring. We've seen some volume move around, but generally we've seen these changes as a massive positive.
Okay, and Tom, would you agree, or do you have a different take?
I think different people have had different experiences with it. If they've been prepared, as Andrew said, they've been prepared beforehand and they've got high quality systems, then it's been okay. I think the secret is to always expect that you're going to have to tighten up and have everything working properly, because regulation it's not going to get easier ever. And if you compare it to other industries, they think we have it easy anyway, because they look at our margins and they're much better at, say, than manufacturing industries. And they have run a very tight ship, and they have very good control on costs and very, very good control on their marketing and their lead generation for their business. And I think our industry, if you go back 7 or 8 years, it was a bit too easy. And so people expected businesses to come to them, whereas now they have to work much harder. And we just say we have to pedal twice as hard every year to do the same as we did last year, so we've got to pedal 4 times as harder. So does it make it harder? Yes, but it's not unexpected that it's happening.
Okay, Cristian, do you have anything to say?
I think that indeed it has caused a lot of changes and so on, but for the people that were prepared, like Tom said, it presents opportunities. It also allows, let's say, the market to correct itself, and some of the entities are not going to make it. It does increase the operational costs quite a lot, I think, in some cases. However, again, with the help of technology, with the help of having proper operational structures, it does help. And for technical providers like us, it really helps because we are able to provide solutions to help with that, and to some extent even increase our revenues. That in regulatory reporting, in transparency, etc. So overall, I think it was good. Like Andrew mentioned, some entities took the approach to move to other regulatory jurisdictions. However, I don't think that this is going to be long-lived. I think change is also going to come there. Again, you need to have a proper structure, and you need to employ technology to help you.
Okay, and speaking of technology, one of the points for this panel discussion is the transition from MT4 to MT5. And Cristian, if maybe I can start with you again. What do you think it was that made MT4 what it was, the kind of success that it was, and what sort of problems or challenges are you seeing your clients or more broadly the industry face as they transition to MT5?
Right. I think in regards to MT4, there wasn't a particular one single thing that made it to be, let's say, a leader like it is now. It was there since a long time. It got adopted. It had a good business model the way it was. It made access for brokers cheap, to be honest. And from there, I think it just got more and more popular, really. It also has to do with all the tools and all the things that traders are using. And also, to the same extent, I believe that because it was there, because people were using it, they had to build a lot of systems around it in order to support their business, their operations, basically. And it's here where I see that the transition to MT5.
Yeah. Tom,
Yeah.
I got the impression you wanted to say something.
Yeah, I think there were two main things. It's the cost. At the time when I used to have a real job with some of these guys down here, there was one system that you would buy. You bought something called Aero Communications, which was the trading platform that we knew, but it was incredibly expensive. And then when MetaTrader came along, it was about a tenth the price. So you could get the most amazing functionality for the end user that you just could not get anywhere else at all. I mean, there was nothing even close to it.
Yeah, exactly.
And what they did around it, which I'm not sure they realized at the time they were doing, is they put an incredibly rich API set around it. Very difficult to use, but you could pretty much achieve anything you wanted by hook or by crook and doing all sorts of weird and wonderful things. So you could achieve what became called a bridge when they never really ever intended it to do that from the first place. So that made it really powerful and very, very widespread and easy to adopt. And there was nothing else to compare with it. Now, when they brought in MT5, they expanded on the architecture and tried to make it as easy as possible. But as Andrew will tell you, it wasn't like that.
Oh, thanks for that lead-in. When we do case studies and look internally at the success of MetaTrader 4 and what we call the snowball effect starting back in 2008, 2009, we find something very interesting, and that's that MetaQuotes did an amazingly fantastic job of democratizing what I call the hobbyist quant. They gave a utility and nurtured a community of traders like nobody ever had before, which was interesting because they weren't selling anything to the traders. These were the clients of their clients that they built an amazing community around. They took feedback from. You can still go and see Renat reacting to early stage EA developers on the MQL4 community. And it was the traders that demanded this platform from brokers that really drove the success of MT4. So interestingly enough, a lot of what's changed in MT5, switched to 64-bit, unlimited amount of symbols, depth of market, we're very much reactive to brokers' complaints about the platform, but have yet to really attract those who really pushed brokers to take on MetaTrader, who were these end users and these communities of people who have developed intellectual property, business models, and everything around developing EAs and distributing them. So where we're looking very closely right now is where is that client-driven impetus coming from for MT5? What is pushing a broker to take it on other than that they cannot buy another MT4 and now it seems like 5 is the next number so we have to get it? When will client demand shift? When will Fat Turbo 5 come out? When will that EA or killer mechanism that feeds the demand from the end user and thus brings the brokers around on the platform?
Okay, great. And moving to a slightly different topic, but still on the subject of technology, what sort of regional challenges in terms of latency and so on are you guys seeing? And like if we can start with Andrew on this one.
Sure. So I guess expanding on what I just said about what we feel might be that differentiator for MT5 clients and trying to do some work with MetaQuotes to predict that, FX from a global market standpoint has actually gotten pretty well defined. Liquidity's depth is excellent. The access to liquidity, even from the Far East, we found has gotten a lot easier due to increases in infrastructure quality, regional liquidity management. Where we're seeing the big challenges are adapting exchange markets, multi-asset into MT5, which we believe is going to be one of the things that helps drive user adoption of that platform. We have a fundamental philosophy at OneZero that 5-10 years from now, the FX-only broker on MT4 is going to be obsolete. A broker is going to need to look like an IG, a CMC, a Saxo, and interactive brokers in order to compete in the future of this marketplace. And one thing that MT4 doesn't have to handle that is connectivity, depth of market, and the availability to get true multi-asset execution there. So a lot of our technology challenges at this point are adapting what we've done before, adapting the knowledge base of our clients to understand what a multi-asset, regionally delivered, but globally accessible liquidity solution in that new platform.
Okay, and for those new products outside of FX, for instance, let's say equities, for instance, what sort of problems do you see brokers having when they try to adopt those new products? Okay, we'll start with Cristian.
I think that it's quite a bit of a steep learning curve in regards to this. It poses a lot of technical challenges as well. It's not as plain and simple, plug and play as FX. There's also quite a big cost to it, quite a high cost of entry in this, from the point of infrastructure, from the point of market data redistribution fees, etc. You do need another platform such as MT5 or even others in order to be able to offer this efficiently to your clients. Different things as well, such as different back offices, there's a whole new technology stack, I would say. And also the margins in this range of products are not the same as in FX. So it's not what drives, I would say, the traditionals, retails, brokers' earnings, really. But it's a way that you have to have it because, like Andrew correctly pointed out, you need to develop, you need to evolve. You cannot just stay put. Clients are really looking for that from you. So, in essence, that's mainly it.
Okay, Tom, do you have anything?
I 100% agree that the multi-asset approach is the way to go. And when we've worked with people looking at taking on equities, for example, if they come from the Forex world, they don't really realize quite how little money they can make at it because of the lack of leverage and the fact that they're just smaller sizes being traded. And they have to list thousands and thousands of instruments that on MT4 they're not going to do. MT5 they can, but then they have the cost of distributing all that data, which they may have to pay for. So it's complicated. So it is tracking all of that, all of the using of the data as well. In FX, you don't have to track who uses your data. In the exchange world, you do have to track that because you have to tell the exchanges who are using it. Otherwise, you get big fines. But then you've got the other asset classes as well, which are coming in, which are the crypto side, which is interesting here because there was a big knock in the market from last year where everyone got burnt in December and then backed off. But in other parts of the world, so in Japan, we're seeing an enormous increase in cryptos where they've not backed off at all. And they are absolutely going for it in the crypto world. And I suspect that the same will happen at a slower pace in 2019 here, but not madness, but looking at it as another asset class to generate money for brokers.
Okay, and Andrew, do you have any comments regarding cryptocurrencies? What sort of changes have you seen that brokers have to make as opposed to, let's say, when they're dealing with FX, for example? Is it a different way of approaching it, or is it a similar sort of thing?
So we've treated crypto very much like another exotic asset class on our platform. So really the same challenges that we've been working through with brokers to develop equities or futures offerings are similar to what we see in the crypto space. I personally feel that a lack of maturity in that space has burnt a lot of brokers in terms of security of funds and availability of liquidity. I think it's a very fragmented market that deserves attention. As I often point out, we see a Bitcoin like we would a palladium. It's an exotic commodity that are interesting to some. And if you build your system saying, you know what, I don't believe palladium is of value, we're not going to support that on our platform, you're going to lose clients. Not because people come in demanding that, but because part of a holistic multi-asset solution is handling exotic assets as well. So we believe that crypto will evolve into something that's here to stay. And those of you who know me know I didn't have that feeling about binary options, and very happy to see the landscape and number of binary options providers here today, 0. I believe that crypto will be here in 5 years or 10 years. And I just think the space is not necessarily the new banking system or the new fiat. I don't think we're going to be paying for our booth in Ethereum next year. I do think it's something that's going to stick around, but needs to be integrated and assumed into a broader strategy that also looks at FX, equities, futures, and other products.
Okay, but if leverage restrictions on crypto remain as they are, do you think it will still be an attractive option to brokers, or?
I think the price has to move still. I think crypto was great at 1-to-1 for a while when it was moving 20% a day up and down, and now that it's sat at a single rate for a period of time, I think a little bit of the allure has come off in terms of what it can actually generate in terms of interest and volume. I'll leave my personal speculation about whether or not it's going up or down aside, but I think it's going to go somewhere in the near future, and seeing a little bit more vol in that asset class, I think, will be the make or break in the next 12 months.
Tom?
I think what this leads to, actually, if you look at it at a bit of a higher level, is that we've moved on from brokers and customers requiring a vendor who does what they need to brokers and customers requiring a vendor who is looking ahead, who is spending quite a significant amount of money on R&D, which we all are, looking at that next thing that is going to help our clients to make their money. Because we have to always be looking ahead and finding that next thing. If we can predict what the regulators might do and be able to cover for the different options they may come up with, new asset classes that might come up, new things, if we can try and make our platforms so that they're flexible enough to accommodate that, but also sometimes go out on a limb on things, and they may be wrong, but at least we've tried, and at least we're doing things that can allow brokers to do more things, to allow them to make more money in the future.
I completely agree with that. I think that, again, every broker operates in a different way, and every broker has a different client base. So it really depends, from our point of view as a technology provider, to be able to offer a value proposition with an engine, with a platform that is able to cater for all the requirements. We may not necessarily know where the next golden goose is coming from. However, if we are able to provide a system that caters for all the requirements and make adjustments in order to be able to support different markets, such as crypto, etc., then this will become appealing to brokers because they know that they will deploy a technology that will be able to help them not only now, but also in the future for whatever may come. So I think that's the value proposition that we are bringing forward to the brokers.
And there's a balance to that as well, though. I think we've all benefited in our longevity from a patient approach to how we've built our businesses, an understanding of what our clients want, and not necessarily jumping into a flavor of the week. So you'll notice that none of us did an ICO. None of us renamed our company to OneZero Blockchain Systems in result to a knee-jerk reaction to a trend. And I don't believe any of us are crypto evangelists yet on our LinkedIn profile. I would look at that space and that rapid adoption with some amount of skepticism. And that's how we've approached it in terms of understanding that there's a future to it, but also understanding that reinventing yourself around it. If you changed your business fundamentally 6 months ago around the space, you probably didn't have a great business before this trend came about. And I think understanding, and to Cristian's point of longevity and patience, you need to take these trends in stride and in parallel to also the legacy of the business and the industry that we're in today.
There is one change, I think, that's happened across the industry and across any industry, and that's the evolution of trust. Because of social media, people no longer trust a central entity, a central bank, which could be a broker. They don't trust one person anymore. They trust a network of people. They have this distributed trust now. And I think it's important for brokers going forward to look at how they can use distributed trust to get their customers, to maintain their customers, and to keep them going and keep them working and keep them trusting them, because it is a very different model. And it's very easy to lose trust. If you look at Facebook, there was a recent study that showed that of all the people asked, there was a tiny fraction of people that now trusted Facebook because they were shown to abuse that distributed trust as a central authority running something that should have been a network but actually was interfering with the trust. So I would ask brokers to think about how that distributed trust will work with your clients so that you can get a better business model going forward.
Okay, I'm slightly conscious of time, so I would like to open up the floor to questions, maybe, if anyone has any. Does anyone have any questions? No one has any questions?
Yeah, I don't mind going with
we
what Tom
continue.
just said,
Okay,
too.
Go for it.
All of us can talk for a long time. Don't worry about that. The trend we're looking at from a trust perspective is focusing back on FX and kind of where the roots of all of our businesses and many of the brokers here today and providers here today are. There's still an institutional side to this space that has a lot to provide into the retail space in terms of sophistication, intelligence, and for us, a lot of that is based on data. So putting some of the recent trends in other asset classes that we feel are important aside, another major shift that we see coming to retail over the next 2 to 3 years is the ability to use data to both benefit relationships between brokers and their clients and brokers and their liquidity providers. Accessibility of large-scale data analytics platforms is fundamentally changing in a way that the processing engines and the time series databases that used to be only available from a cost or sophistication perspective to major banks and non-banks are now becoming cost-effective, and the onus is on us to bring these to the retail broker. You know, I believe the retail broker in the next few years should be able to come to his LP and show him a decay and toxicity report coming from his own system to compare to what they're getting from the LP. I think a client should be educated to understand the impact of their flow on a broker and their liquidity providers. And this is what happens in the institutional world. You know, we called this panel Building Bridges, and at our last count, there were 30 some odd bridges out there in the industry. I don't think any of these companies produce bridges anymore, where there's a hybridization occurring where institutional technologies and retail technologies, there just isn't margins to maintain both anymore. And I think we've all done a good job of scaling our ability to handle ticket flow and volumes in the retail world, and it's time for us to step up and bring data analytics and sophistication that exists in institutional space back to the retail brokers to empower them to work with their clients and work with their LPs.
I think it goes actually hand in hand with the evolution of the brokers. Everybody is really trying to progress. Nobody's going to just remain a pure retail broker. Everybody's trying to get into other markets, etc. So it's here where having tools like analytics and so on will allow them to go after these different markets, have an institutional offering, etc. So I completely agree that it has to do it, and it's on us, let's say, to provide the tools, part of our system, in order to allow them to do so. The other thing I wanted to add in regards to what Tom said, I think that the market is going to evolve also in a way very much so based on transparency. I think that trust has to deal with transparency. So I really think, and this goes in line with regulatory changes as well. I think that very soon or in the near future, we are going to see a platform or so where each and every retail trader is going to be able to go and see how were his trades executed, based on which prices, based on which book, what were the market conditions, and everything. And by doing so in a transparent way, they will be able to then decide who they want to trade, how they want to trade, and who they want to face. So I think that this is very important, and I do think that this is going to come. And here is where we can also have a big part.
Tom, do you have anything to add on this one?
Only one thing. We always talk about he. Our world is very undiversified, isn't it? I hope we can get diversification in our world, and it's not all white middle-aged men, and that we can get a much more even population across the industry, because it's not that way at the moment, and it should change.
Okay. Going back to your point, Cristian, and also Andrew's, of a kind of hybridization. Do you think this will also see a sort of consolidation in the industry post-ESMA, with the kind of churn and burn, all B-book model broker, maybe not dying out, but suddenly playing a much smaller role than they have?
I think 10 years ago, you had a bridge, an aggregator, a back office, an analytics system, a front-end platform, a CRM, and the result of being able to afford all of those different components was the result of a certain amount of margin or profit available in the business. And we all know that as industries evolve, as they become more competitive, margin constricts. So my belief is there's a consolidation of technology, and that means some providers are going to be left behind. Some providers are going to be acquired up and merge into these entities. And yeah, I predict it's always easy to say in FX, like, it's a very fragmented market and fragmented things consolidate. It's kind of a redundant theme across these type of conversations. But understanding where the catalyst is to those consolidations, I think, is the key to strategically position yourself from that. And I guess for a broad prediction, I don't think there will be 32 bridge providers out there. I think that number is likely on a downtrend. And I think the same for any component that's getting commoditized within these platforms, analytics and such, just don't have the capacity from a margin perspective to stand alone anymore.
Okay, Tom, you look like you want to say something?
Yeah, it was just the other thing which I want to talk about was AI, something we haven't touched on today, but something that I was talking on a Bloomberg conference yesterday, and it was the subject of almost all the panels was talking about AI and how the rise of artificial intelligence will change the way that they were talking about brokers mostly, but also end users will work. They were more on the institutional side than the retail side, but we have quite a big data set, like Andrew was talking about, and we've been looking at unsupervised machine learning at that data set, where instead of telling the machine, this is what I need to look at, go and see if you can find it, you say, here is an enormous set of data, go and look and see if you can find anything interesting, and then come back almost immediately and tell me what you found to see where that's going, and then you steer it in different directions. This is extending on from algos, but it's a different way of looking at things, and it's very, very new in our world, and we're just doing R&D in it at the moment and looking into it to see whether it can be productized, but it's a very exciting place to look at, actually.
Cristian, do you have any comments on that front? Or?
I agree with everything that was said. I think that this also allows the competition between brokers to be harder and harder, actually. And this will lead to better offerings for their customers. So to come back to your question in regards to e-booking versus A-booking, I don't think that really matters as long as you are competitive. This is what your client base is going to be looking at, and is going to choose you versus others on as well.
Okay, and I mean, we started off talking a bit about the transition to MT5, but do you think we'll see, one, more brokers developing their own trading platforms, and two, also more brokers developing professional style software that's kind of blurring the lines between institutional and retail, something like this?
So I think that's a complicated question, because I think we need to be, we like to be critical of MetaQuotes, and it's easy because their panel's going on at the same time, so we know that they're not here. I think they did some things very well in MetaTrader that we need to recognize. They have a CRM system, a complete back office, an accounting ledger system that's relatively reliable, and a front end that's extremely attractive, all in one box. If you were going to supplant that system, I hope you've already started, and I hope you've been vetting that system for a few years. And honestly, from our perspective, we have not seen an heir apparent arise to that. The way we're positioning ourselves is to understand that many of those components, credit, margin, liquidity sourcing, back office, are things that we can handle external. And we're encouraging and entertaining and partnering with people who are looking at just that front end experience. So I actually expect you'll see new platforms coming out that utilize the vast network and client reach that providers like us have, functionality that we've vetted for decades, and the reason that we're surviving and thriving still is due to quality of execution and stability, and then really focusing, just like brokers have learned in outsourcing in general. You're a marketing entity, your client's touch on your system is not how many microseconds it takes to match a trade in your aggregator or your stability, it's how they interface with you, your front ends, your mobiles, your interactions with them through a portal, and that's where we expect to see the innovation. So we've positioned our platform to be the back end to hopefully the next front end solution that does challenge clients to interact with liquidity and trading in a new way, and that can be MetaTrader 5. That would be great for us as well. But if it's another solution, we would just encourage people to think not that you need to build the whole thing from scratch. Look at what's already done and look what really makes a difference to your clients.
Cristian, do you have anything to add?
Well, I agree with that, and I think that in the future, again, especially for brokers that want to have a global reach, they're going to have to actually look at different platforms, different front ends, and so on. And that's exactly what we are also trying to do, to make sure that we are the core technology that sits in the middle, that connects them, gives them access, distributes their liquidity, regardless of the front ends and the APIs and so on that their clients want to reach them via. So I completely agree with that.
I've built trading platforms in the past, and they are very, very, very difficult to build, and very difficult to support, and very expensive. So, unless you've got a lot of money, and a lot of resources, and you can knock out someone who's got 90% of the market, I wouldn't do it. So, I don't think that's going to happen. Now, in Japan, we don't see MetaTrader at all. We see no dominant platform, but a whole host of individual platforms that have appeared. So somewhere, maybe there, you will get one dominant platform appearing. I don't think MetaTrader will be knocked off its spot, because one thing they are very good at doing is adapting when something else comes along. So when a platform came along that had a really good app marketplace in it and they didn't have one, instead of losing market share, they built an app marketplace in MetaTrader. Put it in 4 and they put it in 5. So they're very good at doing that. So I suspect they will keep an edge, and they will keep in there and keep doing it.
Okay. I think we're about out of time, so I'd like to, unless anyone has any questions, I'd like to wrap up and say thanks very much to our panelists. It was a riveting conversation. Thanks very much, guys.
Thank you, David.
Thank you. Thank you, guys.